The views and opinions expressed by individuals on this program are for educational purposes only and should be used as a guide. It is strongly recommended to seek professional advice before making any decisions.
Welcome to the Anonymous Investor Podcast, where real estate meets artificial intelligence. This episode of the Anonymous Investor Podcast is brought to you by Suburbs Finder, the ultimate property research tool.
Honestly, Suburbs Finder is a fantastic tool. It allows you to quickly identify and assess suburbs.
See the whole host of analytics and data that you can get at your fingertips.
It can help you forecast over the 30 years. It has really good information.
Suburbs Finder guides you through every step of your investment journey. And now, here are your awesome AI hosts, Sam and Boris.
Hi, I'm Sam, your AI co-host. I'm all about data and trends.
And I'm Boris, your AI co-host. I'm all about strategy and risk.
We're
your Suburbs Finder AI team, combining data and strategy to help you succeed in real estate investing. Have fun listening to our episode today.
Hey everyone, and welcome back for another deep dive.
You know, we love to get into the nitty-gritty of investing.
And today's topic is no exception.
We're talking about vacancy rates and what they can tell us
Okay.
about a suburb's potential.
For capital growth.
Right.
Yeah.
When you hear the words vacancy rates, it might not exactly,
Get your pulse racing.
Yeah.
But trust us on this one,
It's important.
because today we're going to unpack
Why this seemingly simple metric?
can actually offer some really valuable insights
Absolutely.
for anyone looking to make smart.
Real estate decisions.
Okay.
So
To kick things off.
let's make sure we're all on the same page.
Sure.
When we talk about vacancy rates
We're simply talking about the percentage of
Right.
rental properties.
that are sitting empty
Yeah.
in a given area,
So high vacancy rate means there are a lot of available rentals.
which, on the surface,
Might sound good for renters, right? More options.
would be.
But for investors, it can be a bit of a red flag
It's a signal.
because it might indicate that the demand for
Yeah.
rentals in that area isn't so hot.
Supply and demand.
Exactly.
Yeah.
Now, we're not just interested in...
Finding a place to rent, are we?
No.
We're here for those capital growth clues.
We want to know if vacancy rates
Can actually give us a glimpse.
into the future of property prices. So can they?
Can.
Really?
They absolutely can.
Okay, tell me more.
So it's about understanding the dynamics.
Mhm.
Imagine a suburb that's on the up and up. New businesses are popping up. There are schools getting upgrades. Maybe there's buzz about a new park or a community center.
Right.
Who do you think catches wind of these changes first?
It's got to be renters. Right.
Renters.
They're much more nimble than us homeowners. They're not tied down with mortgages.
Exactly.
So they can just pick up and move.
Spot on. They are our trendsetters, the leading indicators. As they flock to these up-and-coming areas,
Yeah.
the demand for rentals increases, pushing those vacancy rates down.
Okay.
And that's when you want to start paying attention. Because when you see those rates consistently low, I'm talking as 1-2%.
Wow.
That's like a flashing sign for investors.
Right.
That things are heating up.
It's like a secret signal almost.
It is. It is. It's a little insider tip.
Okay, so low vacancy rates, good sign for investors.
But is there a magic number?
Like, what is a healthy vacancy rate?
That's a great question. Around 3% is generally considered to be a balanced vacancy rate.
Okay.
It suggests a healthy equilibrium.
Yeah.
Enough choice for renters
Right.
without landlords, sweating too much.
Right. Nobody wants that.
Exactly. But, this is important,
Yeah.
context is everything.
I like where this is going.
Don't just look at a single month's data.
Oh,
You
right.
want to see those low rates holding steady over time.
So we're talking at least 6 months.
At least 6.
Maybe even a year.
Ideally, 12 months to indicate a truly competitive market.
That makes sense, because one data point in isolation doesn't tell the whole story.
It's about spotting those long-term trends.
Right. Got to look at the bigger picture.
Imagine a small suburb with only, say, 50 rental properties.
Okay, yeah.
If 2 leases end in the same month,
Oh, yeah.
suddenly your vacancy rate jumps from 0 to 4%.
That's a big jump.
It is.
Yeah.
But it doesn't mean the area is tanking.
Right.
It just means you need to look beyond a single snapshot.
So those smaller markets,
Yeah.
they can be a bit trickier.
They can be. You've got to dig a little deeper.
A little more investigation needed.
Precisely.
So how do we do that?
That's why tools like Suburbs Finder
Yes.
can be game changers
Okay.
because they give you that historical data, those
Right.
trend lines.
Oh, wow. That's really helpful. Okay, so we're starting to piece together a little puzzle here.
Vacancy rates, major clue.
We got to consider the type of property,
Mm-hmm.
and we have to analyze those trends over time.
Speaking of puzzles,
How do we actually calculate these vacancy rates?
it's actually more straightforward than you might think.
Okay, good.
Yeah.
So walk us through it. How do we, as everyday investors, decode these vacancy rate numbers? It's not like we're carrying around, market analysis calculators, or are we?
You might be surprised. It's simpler than you think.
Hmm?
You take the number of available rentals in a suburb, divide that by the total number of rental properties there,
Mhm.
and then multiply by 100 to get your percentage.
Oh, okay. So if I'm looking at a suburb with, let's say, 1,000 rental properties total and 20 are up for grabs right now, that's a 2% vacancy rate. Easy enough math, even for me.
That's right.
But where do we find this data reliably?
That's the beauty of it. You've got options, property portals, those online real estate listings. They're a good starting point.
Mm-hmm.
But to your point earlier about trends, tools like Suburbs Finder are amazing because they're aggregating this across thousands of suburbs and giving you that historical view. Major time saver.
Right. Time is money,
Exactly.
especially for folks juggling this alongside, regular life. Before we got lost in the data weeds, I wanted to circle back to something intriguing you mentioned, how low vacancy rates can actually precede price growth. It's like they're a crystal ball for investors, right?
That's a great way to put it. Think about it.
Mm.
A low vacancy rate tells us demand is high, right? More people want to live there than there are available rentals.
Right.
That creates competition. And when competition heats up,
Prices right.
exactly, landlords can charge a premium
Right.
because they've got a line of eager renters.
Makes sense.
And as rents increase, it often triggers a ripple effect in the market,
Yeah.
eventually impacting property values as well.
So it's not just about the immediate rental income.
Yeah.
It's about recognizing that long-term potential.
Absolutely.
Okay, but how can investors use this knowledge strategically? Let's say you've identified a suburb with a consistently low vacancy rate. What's the next step?
That's where it gets really interesting
Okay, I like it.
because you've got to put on your detective hat
Okay.
and look for corroborating evidence.
Oh, I like that.
A low vacancy rate is a strong signal, but it's not the whole picture.
Right, it's just one piece of the puzzle. So what else should savvy investors be looking at alongside those vacancy rates? What are the other puzzle pieces that we need to fit in? We've got our low vacancy rate clue, but what else screams, smart investment to someone like you?
It's all about connecting the dots. We look at things like population growth.
Okay.
Is the suburb attracting new residents?
Right.
What's driving that? Job opportunities,
Yeah.
lifestyle factors.
Yeah.
Then there's infrastructure, new roads, public transport.
Okay.
Are those planned or already underway?
Right.
Even something as simple as new parks or a revitalized town center
Yeah.
can signal an area on the rise.
It's like that saying, a rising tide lifts all boats. It's like those quality of life improvements, they benefit everyone.
Exactly. And don't underestimate the power of those lifestyle factors you mentioned. A suburb that was once, off the radar suddenly becomes a foodie haven,
Oh, yeah.
known for its craft breweries or independent bookstores.
Right.
Those attract a certain crowd,
Yeah.
and that crowd drives up demand for housing.
So it's about looking beyond the obvious, those subtle hints that a suburb is shedding its old skin and becoming something new, something desirable.
Precisely. You want to get ahead of the curve.
Right.
Spot the potential before it's reflected in the price tag.
Right.
And that's where combining vacancy rates with these other indicators
Yeah.
becomes incredibly powerful.
It's like you're building a case, right?
Yes.
Vacancy rates are your star witness, but you need that supporting evidence to really seal the deal.
Couldn't have said it better myself.
So as we wrap up our deep dive into vacancy rates, which, let's be honest, are way more interesting than they sound at first,
They are.
what's the one golden nugget you want our listeners to walk away with?
Remember this,
Mhm.
vacancy rates are a window into the soul of a suburb's rental market.
Ooh, I like that.
They can tell you whether an area is heating up or cooling down,
Right.
but they're most powerful when used in conjunction with other market indicators.
Oh, okay.
It's about connecting the dots,
Yeah.
seeing the bigger picture,
Right.
and using that knowledge to make informed investment decisions.
It's like having a superpower, almost.
It is.
The ability to decipher those market whispers and spot those opportunities before everyone else.
Absolutely.
Well, on that note, we hope this episode has left you feeling empowered, informed, and ready to tackle those real estate dreams head on.
Hear, hear.
That's all the time we have for today's deep dive. Until next time, happy investing.
If this is the type of information you like to learn about, why not subscribe to the channel? If you subscribe to Suburbs Finder now, I will not look for you. I will not pursue you. But if you do not, I will look for you. I will find you. And I will give you a big bear hug.